Foreign investment banks have generally lowered their economic growth outlooks for Korea for this year.
The average is in accordance with the Bank of Korea's outlook of 3.4%.
But some have gone down to the 2% range on weaker domestic consumption and falling oil prices. Our Sohn Jung-in reports.
Foreign investment banks were prompt to adjust to Korea's growth forecast on mounting downward pressure. According to Bloomberg, the market median for Korea's growth forecast stood at 3.4% on Thursday, in line with the Bank of Korea's forecast. Bloomberg's survey of 27 institutions showed Nomura has slashed its outlook for Korea's growth to 2.5% from its earlier forecast of 3%, becoming the first foreign institution to project an expansion in the 2% range. Analysts cited slumping domestic consumption and slowing exports as factors denting the growth rate, along with the global economy recovering at a slower pace than anticipated. They say external factors such as the prospect of the U.S. raising its interest rate and the weakening of the Japanese yen could also drag Korea's growth down further. But some investment banks have kept their rosy outlooks. Barclays has projected a growth rate of 4%, while Credit Suisse has matched the government's outlook of 3.8%. Inflation projections, however, by foreign investment banks have dropped to 1.3% from an earlier figure of 1.7%, as Seoul is under stronger deflationary pressure this year. Domestic research institutes have also indicated that they could lower the inflation outlook in their quarterly projections next month, with oil prices at a lower level than they projected last year. Sohn Jung-in, Arirang News.